Alright guys, so it's another Sunday. Um, Not a lot going on work-wise or stuff. I'm off to Edinburgh tomorrow because I've got a meeting up in Edinburgh. Um, then flying to Spain later on in the week as well. But one of the things I want to cover about the stocks and shares, the market's down at the minute. One of the things I do recommend is not selling unless it's a massive crash. And then if you're late to it anyway, I'd probably say just hang on and let it correct itself. See, AI is inflated value at the minute in many ways, but it's still in its infancy as well. So the technology is still moving forward. So there's a few things going on where you've got OpenAI that's not very good at money. It burns it like no tomorrow. It makes big deals with people like Nvidia for more graphics cards or whatever it's buying, but at the same time it's struggling financially. So that has a little knock-on effect with Nvidia. So you've got to keep an eye on that stuff. I don't think it's going to fail. I think what's going to happen is you'll just get some more market corrections and stuff will find something. Suddenly OpenAI comes up with something we hadn't seen with AI before, and a new little market opens up that then helps stabilize the finances. We'll see. I mean, at the moment, there's speculation, but I still see there's a massive amount of growth in the AI market. I still think we're majorly in the infancy. If I look at it from a bigger perspective, AI is still a bit stupid. It can only handle certain things, and it can't always handle it correctly. So the reality is, it's on a constant learning curve. It's still learning to walk. So there's still a lot of mileage in it, but I do expect we're going to see a lot of changes over the next 5 years. So although the market seems inflated, I think the key to it would probably be being able to do it faster and cheaper. Because at the moment it's burning energy, it's burning tech, etc. It's got to be faster and cheaper, and I think it will get there. Nvidia also is reliant because it's selling a lot for the AI tech out there. So it's also in the same game of these new developments, new industries that are forming. So I do think Nvidia's got growth in there, but it's got to be careful around people like OpenAI, which I don't believe is anywhere near making any money in the near future. It's riding along on positive media, I suppose, and expectations that something's going to come out of it. But I totally agree. Whoever gets there first, a bit like the person who created the Bluetooth, the same person, well, not the same person, the person that created Wi-Fi. You've only got to get it to a point where everybody's using it. And this is one of the things I want to bring up is Taiwan Semiconductor something. Is it TSA? Look for Taiwan Semiconductors and look who they produce for, because the answer seems to be pretty much everybody. So if you're a little bit concerned, I would have a look at that and see if you can see growth in it. Because my view is, your home computer at the moment, your laptop or whatever it is, currently relies on your main motherboard and everything it's got, and your graphics card. I think we're going to see AI chips as the next evolution in that, where you've got an AI chip doing a separate set of work. It sort of clicks for me because I look at the Commodore Amiga. The Commodore Amiga had multiple chips, had Paul, and they did different things, which meant it worked really well because its processing power was quite low, but its ability was high because of all the different chips did different functions. So I can see that as a next step thing that could easily occur. And we could be pushing on the Nvidia, could be pushing on the OpenAI, or pushing where the chips are going to come from. Because I think pushing from where the chips comes from doesn't mean it has to be OpenAI. There's other stuff going on with AI out there. Somebody hits the golden nugget, you want to be the guy selling the shovels. At the moment, I will be clear, this is speculation, but I do recommend just having a look at it. My stocks and shares are up and down at the minute. The market's all over the place. Rachel Reeves, good old Rachel Reeves, she hasn't even announced the budget yet and upsetting the market. I laugh because, let's face it, these are things that you invest in and you hold. My stocks and shares will be around a lot longer than the Labour government will be. So the ripple effects, especially in the gilts market, because she's all over the place again, but I can see it's going to be a bad end of month budget, let's put it that way. So the gilts will take a bit of a knock on it, but I'm expecting that. Also, if I look at my three main funds, because if you're on trading 212, you probably know, I mentioned before, I had a lot of stocks I'd bought outside the pies, because I bought them, but it bought them separately and didn't put them in the pies, because you put the money in the pie, then it balances it across the different stocks. So I actually bought it directly because I was in the pie, but then I would click on it, then I bought it, and then it buys it as a separate set of shares. So one of the things I realised, if you click on the top right, you can, if you're inside your pie, click on the top right, you can add more shares to it, and then you can take those back from outside back into it. Downside is my portfolio is out of sync at the minute, because what I've done is the Vanguard ones, they're all, the ones that are outside are now in there, but that's out of sync. I've rebalanced that one because there's no cost to the rebalancing in the funds. The My Picks one, because it's got lots and lots of shares in it, if I try and rebalance that now, it's going to charge me. I don't want wasting money. So what I'm doing with that one is I'll just balance it manually. So for example, I'll go in there and go, because what I've done is I took all the other bits and pieces that were outside the pies and put them in there now. So I've now got 3 pies. So what I'm looking at is, like, for example, the other day, 5% of my stock's going to be BP, British Petroleum. So it was at 1.5–2%. So I went and bought more. So now it's nearly at 5%. I've got to do that with all the others. The ones that are overvalued, because I bought some stocks which are sitting at, say, 14% when it needs to be 10% of the whole pie. I just stop buying that until it catches up. You know, all the other little ones catch up with it, because the idea being that once it's balanced, I just put, say, £100 in there, and it invests it across the entire pie. At the moment, I'm having to manually do it because I messed up. I'll openly admit I messed up. But inside there as well, my uranium stocks are way down. I lost about £8 on those, which I'm not particularly bothered about because that's an investment up to about 2030. There's a lot of stuff going on in that market, and I'll tell you now, that will swing from a loss to profit in a week. It's going to go like backwards and forwards because it's a volatile one, because quite simply there's a lot of new stuff coming out. If you look at like mini reactors and stuff in America, there is loads of stuff going on, and it's not really talked about in media because everyone's buying a wind turbine and a Tesla. This stuff I think is going to blossom. I don't think nuclear is dead at all. I think what will happen is you'll get some cyclical stuff going on. Then somebody realizes they found a new way of dealing with nuclear waste and all that sort of stuff, and suddenly it becomes the most economic, and bang, it becomes the technology. That's my personal view, though. You don't have to agree with me. I'm a little bit concerned about property investments at the minute, but even that, what you find is you'll get the crash, then the bounce back. So this is why I'm saying I'm an investor, not a trader, because I don't sell the stocks, I hold on to them. So even when I'm seeing something bad, I'll keep it, which sounds crazy, but you do. A good example of this, which I haven't really got it myself because it hasn't dropped when I've had it. But if you take some of the real estate ones where they've dropped this year by 7%, if your dividends was 4%, you've already lost money. It's worth less than you invested in there. But the point I make is, if you already invested in it, leave it. Leave it. You're still going to keep getting your dividends unless it goes completely insolvent. But the markets are moving around a bit. You've got a lot of volatility across many sectors. So my view is, this is my personal view, is don't jump ship. If you invested in it, studied it, looked at it, thought that was a good investment, just because it's dropped in value doesn't mean crash it out. Kimberly-Clark has crashed out. they bought a competitor, so at the moment that's a dud. But at the same time, I took my money out, it's still there. I'm gauging whether it's worth investing more into it while it's down. Love to hear other people's viewpoints on that, because it spent $15 billion on a competitor. Now, what that long-term growth looks like, we'll see. So, how's my week going with the stocks? Well, the My Picks, which is the one where I've got lots of bits I do myself, that's down by about £4. Tears in my eyes. Not particularly bothered, because I expect by Tuesday, Wednesday, it's probably going to jump up, because a lot of it is because of the media stuff. It's not actually failing on anything. It's not like I don't know, bought a dud business that's suddenly gone bust. It's a case of it's market volatility. The nuclear one alone fluctuates it. Motorbike is growing quite well, which sort of shows My Picks is being outperformed short term by the Vanguard funds, which are motorbike. Why is it called motorbike? Because that's what that money is going to be spent on. I'm saving £7,000 for a motorbike, so the money is going in there for the motorbike. I'll probably end up getting to the point where I just buy the motorbike and leave the money in there, but then it just becomes a psychological thing. For visualization, I put the money in there. So motorbike's going up. I think that's probably about £14 profit. And then the meds one is doing well. That's actually about the same money, same profit, money-wise, but we're probably about half the funds. So it's outperforming the other two. So it does show My Picks is a bit all over the place, because it's got so many different types of shares and stuff in there, but it will stabilise. Vanguard's steady Eddie, the motorbike, and then the med stuff does seem to be moving forward. And I'm expecting some growth in the meds one anyway. And it's only 4 companies in there, but I do expect there'll be some growth in that. So I expect that is either going to crash and burn or outperform the other two. But yeah, that's this week. And obviously I do a thumbnail of where we are financially as an overall. The other thing is, if you do want to get on 212, if you use my referral, as soon as you put some money in and buy your first stocks, you will find that you'll get a free share, and I get a free share. So do recommend it. One of the things I will say is, if you don't want to do what I do with the My Picks, where you're buying lots of little shares, I do recommend looking at things like the Vanguards, the iShares, and the markets they're in, because they'll take a lot of the risk out of it for you. Although they'll say it's always risky, and I'll say it's always risky. the reality is they're much better than I am on this, because at the moment, because there's a lot more stable. But that's why I've got that one, and I've got this one, and I've got this one. They're all doing different things to see how they all perform against each other. So the next one is to get the meds one up to about 500, and the other ones, they're already over it, I think, now. So, but anyway, guys, that's it. Thanks for watching, and if you want me to talk about anything specific, just drop it in the comments, because I'll quite happily go over stuff. Thanks for watching.